It's the simplest way that you can make money online. So when it comes down to trading, we want to be following the trend. That's the easiest way that we're going to be able to make money because 80% of the profits are made within the trend. So if you are a counter trend trader, you're really calling yourself short here, right? So a lot of people might use moving averages. Moving average is basically going to flow kind of like this, right? It's going to flow along the side and you're going to be able to determine the trend based off of what side it's on. Well, that's actually wrong. That's not the way we want to do it because the moving average is a lagging indicator. The lagging indicator means that it's going to be a process of the past candles. So how are we going to know when the trend actually changes immediately? Well, we need to devise a system that is going to be usable on the very next candle. So what we start doing is support and resistance. We start doing structure breaks and whatnot. A lot of people use different pivot points. So if there's a wick on a candle, they might be looking for a break above that wick. Now, what I advise you to do is don't look at the wicks at all, right? So if we have some candles here and we're saying that that is a downtrend, correct? Right, that's very obviously a downtrend. Where is it going to be an uptrend, right? And we could have wicks anywhere, it really doesn't matter. Well, this is the move that brought us to that low, right? So that's the area that we would want to close above in order to convert the trend to the other direction. Now, in the case where we fall short of that and we attempt to make a new high, but we fail to, with the wick being the key indication of that we failed, this is going to be a strong indication that we're actually going to come back down and come back to these lows that we started this move on. The same concept of how we're retesting the start of this leg. So to answer the very initial question, how do we make money with this, is what we want to be doing is when there's a trend, we want to first be identifying that trend based off of the closes of the candles. So we continue to close beyond, right? And then we're going to be buying with that trend, right? And the only case where we're going to go against that, this is generally the case for beginners, is if we happen to, let's say, start to break the trend, right? And we see a wick beyond. That is a strong indication that we are, again, going up and a failure to make the new low. So your key takeaway here is if we see a wick, we're going to want to be buying on this candle and then targeting these previous highs that brought us there with a stop below there. So this would be your trade.